Welcome back to the cryptoworld channel, everyone. My name is Josh, and right now, Bitcoin is retesting this critical area on the chart after just wiping out billions of dollars of short positions, while this massive bullish signal is still flashing on the Bitcoin chart, while Ethereum is now rejecting from this critical area of resistance in the short term. So I'll be talking about all of that and more later in the video, so definitely watch to the end. First of all, just before we take a look at the Bitcoin charts today, we need to once again take a look at the Bitcoin news today, because on Tuesday, we saw another massive net inflow into the spot Bitcoin ETFs. Because first of all, on Monday, we saw a net inflow of just over $300 million US, but on Tuesday, we saw a net inflow of over $422 million US. And the majority of that net inflow that we saw on Tuesday was mainly due to BlackRock. We saw around a $260 million inflow into the BlackRock spot Bitcoin ETF, which essentially means that amount of money flew into the BlackRock ETF, and then BlackRock got that money and bought around $260 million worth of Bitcoin just on Tuesday in order to back their ETF. And so basically, due to high investor demand for the Bitcoin ETFs right now, BlackRock and other ETF providers like Fidelity or ARK, for example, are having to right now buy a lot of Bitcoin off the market. And from time to time, I still see some beginners out there make the mistake of thinking that a $400 million inflow will do nothing to the Bitcoin price because it's a $1 trillion asset. But that is not at all how the market price is determined. The market price is determined by liquidity, not by the market cap. Because, for example, a $400 million net inflow, so a $400 million buy order, essentially buying up that amount of Bitcoin, that will not raise the Bitcoin market cap by 400 million. That would raise the Bitcoin market cap by billions, if not tens of billions of dollars, just with a $400 million buy order. And the same thing can be said for sell orders as well. If someone massive in the market decided to just dump $1 billion worth of Bitcoin all at once on the market, that would decrease the Bitcoin market cap by way more than $1 billion. And that's simply because the entire Bitcoin supply is not changing hands every single time the price of Bitcoin changes. Obviously, it's only a small amount of the total Bitcoin supply that is actually changing hands when the Bitcoin price updates, basically every few seconds. And so essentially, it's the liquidity right near the market price. So only a small portion of the supply that sets the rest of the value for the rest of the coins, essentially the market cap. And so that's why a $400 million net inflow into the spot Bitcoin ETFs is a big deal for the price of Bitcoin, because once again, this can easily raise the market cap for Bitcoin by billions of dollars, if not tens of billions of dollars. And so if we continue to see these size net inflows, multiple hundreds of millions of dollars coming in to buy the Bitcoin ETFs every single weekday, if this keeps up, then it will likely keep up the bullish price action here in the short term for the price of Bitcoin. But with that being said, taking a look at the Bitcoin charts today, and on the 4-day time frame and on this 3-day time frame right here, over the last 1 day, nothing has really changed all that much. So if you're new to the channel and you want to know more about these specific charts right here, then check out my last video here on the channel. And with that being said, if we're taking a look at this daily Bitcoin chart, right now we're actually seeing another drop to the downside in the DXY, or the US dollar index, which is basically a bearish signal for the DXY, but a very bullish signal for Bitcoin, because these two are most of the time inversely correlated or have a negative correlation, which basically means when the DXY is trending in the bullish direction, almost all the time when that's happening, the Bitcoin price is trending more in the bearish direction, and vice versa. When the DXY is trending more in the bearish direction, almost all the time, the majority of the time when that's happening, the Bitcoin price is trending more in the bullish direction. And now, obviously, this is not a 100% perfect accurate indicator. No indicator is 100% perfect accurate all the time, but it is very accurate. More than 90 to 95% of the time, this indicator is very accurate just by looking at the DXY and basically doing the opposite here for the price of Bitcoin. But as I also say here on the channel, when we're looking at these trends in the DXY to determine the trend for the price of Bitcoin, we need to look at the trend and momentum, not every single individual move. So for example, today we're seeing a slight pullback here in the price of Bitcoin, even while the DXY is experiencing a further pullback, but we're not looking at the individual moves when we're looking at this chart right here. We're looking at more of the larger moves or the trends or momentum in the price of Bitcoin, not every single small individual movement from day-to-day price action. And so despite this short-term pullback that we're seeing just right here on the very short term, technically speaking, we're still looking bullish in terms of the trend and momentum for the price of Bitcoin on the daily time frame, at least while the DXY is trending in the bearish direction. And if we're taking a look at this daily Bitcoin chart, we're clearly still seeing this bullish divergence play out as expected, as I've been saying basically every day since all the way back down here. And obviously over the last few days, I've already mentioned that we've broken out above key resistance, which should now act as new support. First of all, we broke out above this area sitting in between 60,000 to 61,000. And more recently, we broke out above this area sitting in between 63,000 to 64,000, which should now act as new support. And at least as of right now, the price of Bitcoin is currently retesting that area, potentially about to confirm it as new support. And obviously, if that happens, if we see some sort of bounce from this area, then that would be bullish price structure. And so in that case, the next resistance to pay attention to is mainly sitting in between around 67 to 68,000, mainly based on previous resistance and support, and also the volume profile indicator showing a lot of traded volume, a lot of resistance at around 67 to 68,000. And once we can finally see a breakout back above around 68,000, the final resistance between the price and new all-time highs is sitting in between around 72 to 74,000. And so once again, the shorter term trend and momentum is clearly looking bullish, at least as of right now, as I've already been saying recently here on the channel. But of course, during a bullish trend, we can see some short term little pullbacks here and there, especially as we're running into resistance. Just like how during a short-term bearish trend, we can see some bounces back to the upside here and there, or bullish reliefs during a bearish trend. And if we're zooming further into the short term, looking at the 6-hour Bitcoin chart, we can see just recently over the last 1 day or so, we confirmed a breakout here in the price of Bitcoin above this golden pocket area of resistance, sitting in between around 64.2K to 64.9K approximately. And at least as of right now, we're currently retesting this area to potentially flip it into new support, similar to what we're seeing right here on this daily time frame. And the other Fibonacci levels and retracement levels to watch out for on this chart right here in the short term are, first of all, sitting at around 67,500 as resistance. And in case we see a breakback below around 64.2K, then in that case, we have this 50% retracement level, which could act as support, sitting at around 62,000 to 62.1K. But once again, we still have this area of support in between 63 to 64,000, which we're currently retesting right now here on the daily time frame. And this is happening just after we saw a major short squeeze over the last couple of days, which I'll talk about in just a moment. But first, if you want to trade these moves in the price of Bitcoin or any other crypto, personally, I take just about all of my trades over on Bybit. So I'll make sure to leave a link to Bybit down below this video in the description and in the pinned comment. And if you use that link down below this video to make a Bybit account and deposit on that account, then you can get up to a $30,000 deposit bonus, but only if you use that link down below this video. And also, if you use that link, it'll take you to this page right here, which is a massive lucky draw happening right now, only for the next 3 days or so. And so just by trading crypto using that link down below this video, it'll take you to this page right here where you get these chances into this lucky draw where you could potentially win some free Bitcoin or Ethereum or USDT or a trip to an F1 race or up to $100,000 just by trading crypto using that link. And so especially if you're going to be trading crypto anyway, you might as well check this out. Once again, first link down below this video. But for whatever reason, if you cannot access Bybit or if you cannot KYC on Bybit, there is also Bitflex, which is another crypto exchange similar to Bybit, but you don't need KYC for Bitflex. And so I will also make sure to leave a link to Bitflex down below this video as an alternative crypto exchange. And with that being said, if we're taking a look at the Bitcoin liquidation heat map, we can see over the last couple of days, the Bitcoin price wiped out billions of dollars of short positions in a major short squeeze just over the last few days. Because as I've said time and time again here on the channel, usually the price of Bitcoin likes to move towards where there's a lot of liquidity, especially if it's close to the current price. And for a while, we had a lot of liquidity just above the price over the last few days, which has now been wiped out. Because most of this area of liquidity right here, the major area of liquidity, was going up towards around 65 to 65,500 as the top side of this area of liquidity, which once again has now been wiped out. But now that the Bitcoin price has taken out that liquidity right there, the next major level of liquidity to pay attention to, at least in the somewhat shorter term, is sitting at around 66,500, and we have another area of liquidity at around 67,500. And as for liquidity to the downside, we do have a small amount at around 62,000, but honestly, that is a very small amount compared to the amount that we still have to the upside. And so ultimately, the price and the momentum and the trend, at least in the short term, is still looking more bullish than bearish, especially while the DXY is trending in the bearish direction. That's a very bullish signal for Bitcoin. But once again, as I said earlier, even during a short-term bullish trend, while the momentum is bullish, we can see some short-term pullbacks here and there, especially as the stock market at the moment in the US is pulling back. This is also potentially causing this short-term pullback right here in the price of Bitcoin. And especially as we run into resistance, expect some struggle around major levels of resistance. But with that being said, if we're taking a look at Ethereum on the daily time frame, at least for now, we have further confirmed that bullish trend reversal with another daily candle close well above this previous line of resistance, which was sitting at around 3260 to 3270, so just below 3.3k. And this bullish reversal pattern right here is known as a bump and run reversal pattern, which is a three-stage bullish reversal pattern where we have the lead-in phase, the bump phase, and the run phase. And the technical price target for a bump and run reversal pattern is the beginning of the lead-in phase, which is right here, sitting at around 3.9k as the technical price target for this breakout. And so measuring from where we are right now, as of recording this video, to that technical price target, that's still around a 14% move to the upside if we can actually complete this pattern. And this price target and this bullish reversal would only become invalidated if we see a break back below this point of the breakout, which at least for now has not happened, which means the bullish trend reversal is still active with a bullish price target. And obviously, not only was the price bouncing from this critical area of support right here in between around 2.8k to 2.9k, we also saw a major bounce from oversold territories here in the daily Ethereum RSI. As we've seen the last few times this has happened, this usually results in some sort of bounce or at the very least a sideways consolidation, so basically a break or a pause from the short-term bearish trend. But as I've also said here on the channel, this oversold signal by itself is not necessarily enough to confirm the bullish trend reversal, so we need to see other signals like, for example, this one that did confirm over the last couple of days. But as I said earlier, for Bitcoin, even though the trend and momentum is looking more bullish, at least as of right now here on the daily time frame, obviously during a short-term bullish trend, we can see some smaller pullbacks or short-term dumps here and there, even during a bullish trend, just like how during a short-term bearish trend, we can see some pumps or rebounds back to the upside here and there during a bearish trend. And so these small rejections here in the price of Bitcoin or short-term pullbacks during the bullish trend especially happened right around resistance. Here on the 8-hour time frame, we have the Fibonacci retracement tool from swing high to swing low on the logarithmic settings, and that places the golden pocket, the most important Fibonacci area on the chart, sitting in between around 3480 to around 3520, acting as strong resistance, at least in the short term. And this was also previous resistance right back here and is still acting as strong resistance. So at least for now, that is the resistance to pay attention to, at least in the short term. And as for short-term support, if we see a further rejection from this area, we should expect some support at around 3340 approximately, and a lot more support at around 3210 to 3250 based on previous support and this Fibonacci level. But if we eventually see a confirmed breakout back above this golden pocket, so candle closes back above around 3520, then in that case, our next major price target just in the short term for these levels of resistance is sitting in between around 3650 to 3.7k based on previous resistance and this Fibonacci level of resistance. And besides the golden pocket, that would really be the final level of resistance based on these Fibonacci levels right here that we need to surpass, the final obstacle between the current price and the technical price target for this bump and run reversal pattern. But with that being said, if we're taking a quick look at the price of Solana on the 12-hour time frame, over the last one day, we saw candle closes pretty much right on 160, only a matter of cents above 160, less than $1 above $160. And so at least for now, we don't really have a lot of confirmation confirming the breakout above 160. But with that being said, we still broke out above around 154, which should now act as new support with this short-term pullback right here. And for as long as we can hold above around 152 to 154, then technically speaking, things are still looking very bullish here because we do have this massive double bottom pattern, also known as a W pattern, for as long as we can just hold above around 154. But in a more bearish scenario, if we see a confirmed break with candle closes back below around 152 to 154, then in that case, expect a move potentially back down to this area of support in between 140 to 144. But obviously, as of right now, we have not broken back below 154. So that is the support to pay attention to in the short term. And as for resistance, we still have a lot of resistance at around 160 to 161. As we've seen over the last one day, the price did struggle quite a lot around 160, give or take. And above that area, once we can finally see a clean breakout above 160, we still have a lot more resistance in between 170 to 175 and in between around 183 to 187. But once again, even though we're seeing this slight pullback, for as long as we don't break back below around 152 to 154, we're technically still looking very bullish here in terms of the trend and momentum, at least in the shorter term. And once again, if you want to trade these moves in the price of any crypto, check out those links down below this video to claim those extra bonuses. And if you want to actually know how to trade crypto, no matter if the price is bullish, bearish, or chopping around sideways, then make sure to watch these videos popping up right here on your screen. The video in the top left shows you how you can profit from bullish or bearish price action using long positions or short positions, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed it, and I'll see you all in the next video.